Hello, my name is Christina, and we will talk about today's oil outlook. As global economic conditions continue to stroll causally towards deterioration, the market scrambles to repraise the possibility for recession. Contributing to the worsening of economic outlook is the soaring inflation with year-on-year US consumer price index, increasing pressure on the Fed to adopt an even more hawkish stance. As a consequence, WTI slipped lower yesterday, 13th of July, closing the day around the 94 per barrel dollars. In the report, we aim to provide a comprehensive analysis on the current economic developments, draw a picture on what could lie ahead, and finish off with a technical analysis of WTI. US Secretary Treasurer Yellen embarked on a new crusade mission towards the Far East, attempting to encourage G20 members to opt in the price capping plan on Russian oil. The price cap aims to prevent another global price spike in the energy sector by allowing the flow of Russian oil towards the West and in parallel restrict the revenues Russia uses to finance its war operations in Ukraine. Problems arising with the price proposal include how to enforce the plan, what would the proposed sales price be, and whether the other counterparts will subscribe to the idea. Furthermore, another factor outside of Western control is whether Russia will agree to sell oil at a mandated price to Western nations. That highlights the fragmented microeconomic perspective of Westerns on the matter, naively assuming that Russia cannot and will not divert the oil export towards other non-Western nations such as India and China. Without much surprise, the proposed plan triggered Russian President Putin's reaction, lashing out and threatening the Western nations for catastrophic consequences for world energy markets if they impose further sanctions on Moscow. President Biden is to visit the Saudi Arabian oil mogul royalties, pitching for a production boost this weekend. Even though it appears Saudi Arabia, the top crude oil producer, currently runs at maximum output capacity according to OPEC, the expected output increases to be discussed at the meeting will take place in the near future. Noteworthy are the major OPEC players, such as Nigeria and Libya, who are facing production and export limitations, falling to delivery promises due to social political unrest and operational hurdles, respectively. Should the meeting with Biden and Saudis fail to produce any increase in production levels in the near future, that could cause practically the price of oil to rise, as it would imply the possible shortage of the supply of the commodity. Turning our attention towards yesterday's key economic releases, we notice that the market reaction was rather contradictory, diverging from fundamental market expectations. As an example, the surprise actually YoY CPI rate of 9.1% contrasted with the 8.8 forecast should have, in our assessment, pushed the greenback to higher grounds, a scenario wherein the strong US dollar will weigh down WTI's price. On the contrary, we saw the dollar closing the day in the red whilst oil closed in the greens. Moreover, US crude oil inventories release reporter surpluses by both the American Petroleum Institute as well as the Energy Information. Administration failed to weigh in oil's price despite implying a slack in the US oil market. Thus, we maintain a bearish bias outlook for the continuation of WTI's price action in the short-term horizon. As to what follows, the Bagger Hacks oil reel count will be out tomorrow, 15th of July, which will shed some light on the demand side of oil. In the grand scheme of things, we expect oil prices to be affected by supply and demand fundamentals. Should market worries for a possible supply shortage intensify, we may see oil prices getting a boost, where on the flip side, should market worries for a possible recession and lockdown measures in China come into play, we may see the demand expectations of oil dropping, thus weigh on oil prices. Thank you for watching.